Good morning, and thanks for joining us here on WSTU Condo Solutions. Every Monday morning from 9 to 10 o'clock, we talk about things that happen in the world of condos and homeowners associations, some of the issues that you may be dealing with, and some of the questions you may have. We're here to help with that. The phone number is 220-9788, 220-WSTU in the studio, and it will take your call and get you on the air and answer your question, hopefully. As I say every Monday morning, we've got just a few rules and not many. But the first one is that we do need something to call you. So we don't have to have your actual name, but we do need to have a name. And then also, but we don't need your association. We prefer not to, because some people will listen and it's not their association, so they don't think that the answer will apply, when in reality, it may be very close to that and may be the answer they're looking for. So, we kind of will, we prefer to stay kind of neutral or nebulous out there. But what we do also warn you about is that we will give you the best answer we can, but we call them radio answers because we don't have your documents. So what we're going to do is give you an answer based on our knowledge and experience and court cases and rules and regulations and your interpretation of your documents. But sometimes that can be wrong. Documents can be confusing. The order of documents can be conflicting sometimes. And so sometimes you can't give a hard and fast answer. So if you're looking to go to court with something, you may want to talk to our legal expert, Peter Mullengarden. Peter is now, we can say he has a specialty in what's it called, Peter?
Condominium and plan unit development.
Yes, that's right. And so now you're also a development attorney. You're actually right, because planned unit development. Oh, no, you don't qualify as that. So,
no.
Okay.
I mean, it's in the title, but
yeah, but we'll just pass over that. But yes, Peter is he's our attorney that has been with us for 17 years since the beginning. He's done the show and helped out, and he's been a tremendous resource to the community, and we really appreciate that. My name is Mark Breckville. I'm a CPA. I'm not a resource to the community, but I am here. So you get me no matter what. But and I also am a community association manager and have some experience in tax and audit. But so that's the basis of the show. It's pretty straightforward, and it's every Monday from 9 to 10, so you're welcome to join us. And we do have our first caller this morning right away, so we'll get right to Helen, I think it is. Go ahead.
Good morning. Thank you for taking my call.
Sure.
Just to start out, our board is a little split, and, we have some real struggles with that. I am currently the secretary of our board. My president and treasurer don't think that I'm legally elected, but we voted me in because the previous one was a snowbird, and we brought it up at a meeting, and she resigned and nominated me, and I was voted in. It wasn't on the agenda, so that's why the treasurer and president are disputing that, but we've been rolling right along, and they seem to accept my minutes and what have you. My question today is, our election is coming up, and it's just first Monday in December. And who is in charge of that? Is that the president's role to set the rules of the election?
As far as setting the agenda for the annual meeting, or how the election is conducted, or what do you mean exactly?
They've used some form letters in the past. They haven't had an election in, I don't know, maybe 15 or 20 years. We currently have a board of 15. And president has his friends, and that way they've done favors, and they'll vote his way. And that's how he controls this board. And so now that I'm not one of those people, I'm on the other side, and I've heard that the secretary is in charge of the election, and I would like to change these letters a little bit and be able to do that without him saying that I can't. Does that make sense to you?
I'm sorry, this is a HOA? Condo?
It's a condo.
Condo. You want to change what letters again? I'm sorry, say that one more time.
Well, the first and final letters. You have to send out a letter within 60 days.
We have to send a first notice and a second notice. Okay,
Right.
The first notice is that right within 60 days. Okay, all right. So you meant the notices. Well, that's an interesting question. I mean, the election is governed by statute. Okay, so first notice, second notice. The statute doesn't really address exactly what that first notice. Well, it does say something about the first notice that you have to have. You have to indicate the mailing address of the association. You have to have a few other things that are in that first notice statutorily. So as long as it meets that, then you're okay. It doesn't address who drafts it per se. And the documents for most associations, and obviously we don't have yours in front of you like Mark always says, those documents usually in the bylaws will set forth the roles of each officer with respect, what are their functions and duties. Secretary's role usually is taking minutes and is the one who is the custodian of the records of the association, things like that. I would say generally speaking, the language of the actual notices, it's an interesting question. It's usually a collaboration of the board, really. I mean, the board, generally, I guess, approves it. Sometimes it's just that function is delegated either to the secretary or to the manager. Oftentimes, more often than not, it's the property manager who's actually preparing the notice, and the board then approves it. So I can't give you any exact hard and fast here because it's one of those details that kind of isn't expressly addressed, really, quite frankly. Most associations just get that notice out, and as long as it meets the statutory guidelines, it's okay, without any direct guidance as to who actually prepares it.
Helen, do you have a property management company?
Actually, we don't. We have a CAM who is also our president, and he is president of our property association.
Okay.
Okay.
It's.
Yeah, I seem to remember Helen mentioning this before.
Yeah,
I think she called before.
Yeah, we've been on here before.
So right now you stand where it's been written by the president. Okay.
Well, he okayed last year's. I just want to change a little bit in it, and didn't know if I had any kind of authority when it comes to that.
Well, you definitely have the authority to make the suggestion that you want to see this or this changed. And generally, I don't know who is in charge of actually sending it out because you have to sign an affidavit. The person who actually sends the notice out and is responsible for sending the notice out must sign an affidavit that the notice was sent out, in accordance with statute, and at least 60 days in advance. So. I would say, if you put a gun in my head, I would say yes, that as the person responsible for providing the notice, that you would have some input. But,
Well, here's my concern. Last year, and of course this is rumor, they didn't. Everybody put your notice or your notice of intent in a box, and then he opened the box and apparently has destroyed whatever these notice of intents. And, he found we just had just enough to fill the board. So who knows? I want these now this year to not be put in that box. I want these people in my first notice, I want to say to them, you must contact me, the secretary, and I will get you a notice of intent, and then you get it back to me. I want that control.
Well, usually the notice of intent, the way I do it is I send a form of that out with the first notice.
Right.
And there's instructions and there must be instructions on that first notice that notice of intent must be returned to the association. Statutorily, they recommend that the owners return it in a way where they get a receipt, either by certified mail or if they have it hand delivered, the association must provide the person a receipt. The state does not recommend it be mailed because there's no proof of receipt, or at least what time it was received, what day it was received. So the state does recommend that owners return it by some method of receipt. Like I said, either by hand delivery where the association must give a receipt, or by certified mail.
We've never had receipts before, and again, it was just to leave it at the office. And I just
if it's hand delivered, the association is required to give the person a receipt for it. Okay, to try to eliminate what happens sometimes is you end up having a dispute between association and an owner as to whether or not the notice of intent was timely received. So that's why they always recommend it be done in a manner where there is a receipt of delivery.
Yeah, there's been situations where people try to slip it under the door of one of the board members at midnight, and all of that kind of thing.
Give it to a security guard or something.
Right.
So, generally, the first notice should actually instruct the owners how to deliver their intent to serve on the board or to run for the board.
So you would include that intent to mail to everybody.
I do.
The first
again, the statute doesn't require it, but I always include a form of intent. Now, they can use any intent format they want. They don't have to use the one that's provided, just as long as it's clear that they intend to run for the board. They can theoretically write it on a napkin,
But they need to get some sort of record that they filed an intent. They can't. Yeah, they need a Dropbox type thing, a box type thing where you just put it in a box isn't going to work because it's not.
Well, funny, that's not technically. I hate to use the word legal, but again, someone who drops it off by hand delivery, and I said this already 3 times, I guess, but they're entitled to a receipt when they do it by hand delivery. So the association must have someone who's available to accept these things and to provide receipts for them.
No, well, the receipts would be new. This is my 3rd year, and I've never received a receipt. I just dropped it in the box.
Yeah,
and again, I'm not saying I'm not saying every association is following, the rules, dotting I's, crossing T's, but, the dropping in the box, let's say you drop yours in the box, right?
Right.
And then your name's not on the ballot. You go, wait a second, I dropped mine in a box. And then someone from the association says, well, we never got it. So now you have this kind of dispute, right? Which you don't want to have. Now, clearly, if you dropped in a box, you know you dropped it in a box. But when did you drop in the box? Did you drop in the box, timely or, on the,
yeah, and that's usually what's going to be the argument without some sort of a dated receipt, and even maybe to some degree time dated, is that if somebody puts it in, let's say in your situation, Ellen, that you've got the box, the president or somebody doesn't have to argue that you didn't put it in. All they'll say is, well, it wasn't in timely. I checked the box and it wasn't in there. She must have put it in after the allotted time. And you're going to say, well, no, I put mine in 3 weeks ago. And he's going to say, well, all I know is it wasn't in there when I checked. It's in there now, but it wasn't in there when I checked at the end of the date. So sorry, you don't qualify. And so that's kind of what happens. That's why these things end up being, that's why there's so much, there's no actual regulation, but there's so much dispute that comes on this intent, because a lot of times what happens is the association just wants to say, well, we got 5 people running 5 positions. Boom. We're going to, we don't have to have an election. And the other thing I was going to mention is that if you haven't been through an election, you mentioned you guys hadn't had an election for, maybe 12 or 13 years or something. This is becoming more and more common that associations are having elections now, and they haven't had them for years. I would, this is a situation, I don't like to spend a lot of money, but if you don't have a property manager who does this all the time, I prefer to have, legal counsel or somebody that does this on a regular basis, at least provide the overall guidance of what the process should be. Because, you are a condo association. The rules are very specific. They have changed over the years, but, and so, it's important to kind of get that whole process right. Otherwise, this is something that can be challenged, and, you could end up having to do your whole election over again. So I would, I would at least, and calling in the show was a good way to start. But like we say, without your documents, the election process is largely controlled by the documents, but state law
No, it's
can
largely controlled. No,
yeah,
condo, it's largely controlled by the
right.
statute.
Well, that's what I was getting at. That the state law overrides what's in your statutes. If your statute is, I mean, it overrides what's in your documents if your documents aren't consistent with the law. So if you haven't upgraded your documents recently, to provide for a procedure that works, you may have language in your documents that doesn't apply anymore. So it's a good idea to take a look at that. I can't imagine that it would cost that much money for somebody to just kind of give you some guidance into how to do the procedure. I had one not too long ago where they actually had, it was a big one, and it was heavily contested, and they actually had the law firm there, the attorney there, and then they had the CPA firm was actually doing the counting independently, and actually went out and picked up ballots when we were doing the vote. Actually went out and picked up the ballots and brought them back and counted them in the office and kept them under lock and key, so to speak. So I would look at that, and some of the language that you want to add may make sense, and that it may mean and there's latitude, as Peter said. There's some latitude on this in terms of what you do. What's funny about some of these things, it's the same thing with the annual meeting, is that it's like the members are just supposed to spontaneously come up with what happens, right? And who runs the meeting always is a question. Some of those kind of things. So it's interesting that on some of these key things like annual meetings and elections, even though the rules are fairly specific as to how they, how it's accomplished, many times there's little details that they leave out that make a big difference, like what's exactly supposed to be in the notice, what you have to say and exactly what happens with the notice. So it's interesting.
Actually, the language in the notices are the least of my problems. He has cleaned out the secretary's computer. I do not have a current up-to-date list of our residents. I don't know how I would send them out when I don't know. He's taken all our files and shredded them, and he's scanned them first and put them on the treasurer's computer. So, he and the treasurer code together. So I don't even know how I would get the people's names and addresses. We do have an attorney. He spends $6,000, $7,000, $8,000 a year on this attorney. Don't I have any rights as the secretary to talk to this attorney?
No.
No.
When I say no, the board generally establishes who is authorized to speak to council. Okay.
Okay, and they've done that. Yeah.
So typically it's not every director. Typically.
How would you think I could get these? I've asked for them. And for 3 months he's said that he's going to get them to me, but
what?
Yeah, he's not going to
get what to you. I'm sorry.
The list of members and their addresses and all that kind of
Well,
stuff.
that's a record. That's a record that any owner is entitled to.
Right.
Much less a director. The secretary should have it. Should just have it. Okay. But any owner, even a non-secretary or a non-board member, just a regular owner, is entitled. That's a record that the association is required to keep. It's a roster of all the owners and a roster of all the addresses of all the owners. And any owner, upon written request, is entitled to have access to that within 10 business days of a request. A secretary should just have it, period. Okay, because that's part of his or her function as a secretary. Right. So, I don't know. Again, in your situation, absent someone, challenging this president or taking him out of office or, going to the state if there's statutory or regulatory violations.
I also have that down. I've done the 10-day form, and of course, they've not done it. So.
Well, then they're in violation. So
I'm going to have to pursue that. I'm just looking, I guess, for an easy way, and I don't think that there is. And how much do I want to put into all of this too? And I'm sure you know this. People out here don't really care sometimes.
Mm-hmm.
Uh,
No, they don't.
and don't want to get involved.
And frankly, especially if overall the basic things seem to be going smoothly. Like, for example, if maintenance is getting done or things are getting fixed, then there's no special assessments. Then people just kind of move along. They don't care because you have to have a problem. I mean, in the HOA world, it used to be that the only way you could ever get enough people for an election was to say we were going to have a special assessment, and then and everybody would show up. So once I showed up and actually showed up at my association. That's the only reason they were going to have a special assessment for the playground they were going to put in or something. I don't know. And so I actually showed up, stood in the back of the room, actually ran into the association's attorney, who was also in the community but didn't let anybody know. She was using her maiden name. so they got everybody to attend. But anyway, it's that's a good way to do that. But yeah, I mean, it's tough because like you say, there's not a lot of this happens a lot in that somebody kind of just takes charge because they're a control freak. They just want to be in charge, and then so and until things blow up. But it's like I always say on this show, and I've said it for years now, and it always bears out. It's been true that no good deed goes unpunished, and this person that thinks that they're really doing good by taking over and doing everything themselves because they can do it right, at some point in time things blow up, and now all of a sudden you're facing maybe criminal charges, you're facing all kinds of things because money's missing or things got spent and nobody knows what it got spent on, and it may have been innocent. The records just may have not been kept well. But like this stuff that's going on here, shredding documents. You better be real careful when you're throwing stuff away and shredding stuff on things, and make sure that you don't have to maintain that for a certain period of time, because there are some statutory requirements, and at that point in time, if something goes bad, people, things get ugly, and the state has gotten more and more I'm not going to say vicious, but more aggressive in terms of how they are going after associations.
Especially with fining now.
Yeah.
They're becoming really aggressive with the fines. I think they need revenue. But
no, that's true.
Under the guise of enforcement.
Most of his side, the people, he's got like 8 of them on his side, and they've all been there in excess of 10 years. And of course, they take the newest 2018 Florida statute, 718, to limit the term limits to 8. Well, it's not retroactive. And I realize that the board has only gone through 1, and the board is not law. But the board says, yes, it is retroactive. So until somebody proves it in court, we're just kind of stuck with that. But I'm hoping, and I don't really like things to blow up, but I think we're getting close to that. And I'll tell you, his latest is he calls the board. He calls them one at a time, and he does what I call he strokes them. He is wanting to purchase. We already have one annuity in the amount of $150,000, and the annuitant is the treasurer, and he wants another one for $200,000. And
that, by the way, is illegal. That is illegal.
We've talked about that.
That is absolutely 100% an illegal investment. You have transferred over the association's money to an individual. There is nothing in the law that allows that. That is absolutely prohibited as an investment, because an annuity has to be in the name of an individual, not the association. So as soon as you create that annuity in the name of the treasurer or whoever you use, you have transferred association assets to that individual. That's against the law. That is fraud. Somebody's going to jail. And I would pursue that, because I can tell you that one's not a good one. And they had that problem in South Florida. The state is fully aware of what's going on there when that's happening, and they're after those guys because that is an illegal investment. And so you need to get after, and that's the first place I would go at this point. If you've actually got that situation, that's just out and out illegal. And I think
I just have to get an attorney.
you just have to file with the state. You know, you need to indicate, you contact the division, let them know what's going on, and file a complaint, because that's not, and the complaint, that your complaint is that the association has transferred association assets to an individual. That is theft. That's fraud. They will send somebody out. I guarantee you they'll send somebody out.
Transferred association funds to what?
To an individual.
Because you said the individual was the
the
beneficiary, the annuitant, whatever.
The annuitant. They own the policy, basically, because the policy has to be written on an individual. So
right, and then they have a beneficiary. So kiddingly, I told some people talking yesterday, they're just setting up for their families. Well, when they die, it's going to go to their family. It's not going to come back to us.
Right, and that's the problem. And even if they did do that, as long as they own that policy and it's in their name, first of all, there's some potential risk with that, because if they get into some financial difficulty, there's the ability to potentially have pledged that asset or whatever. But the sheer fact that an annuity has to be in the name of an individual, you cannot have a condo association or an HOA that has that investment, because to set it up, you have to transfer that asset over into the individual's name. And they were doing that in South Florida. I think they've arrested the guy that did that. So, you're right. I think, at some point, I think it's going to blow up, and this is maybe where it is, because this is just somebody, I know what it is. It's somebody trying to think is getting a safe investment and getting a few extra dollars, but it's an illegal activity and it's not allowed. And it could cost the association a lot of money, and it could result in your treasurer and potentially whoever else signed off on that going to jail.
Well, the guy that sold it to him is a local broker.
Right.
Our treasurer will say to you, I walked in the bank and I bought this annuity. Well, walking in the bank, and it doesn't mean you necessarily get a bank product. You have to turn to the right and you go to the brokerage department, and then you can buy whatever you want. They'll they'll sell you snake oil if you want it over in the brokerage department.
Right.
So this is his way of getting around it, and people here just don't seem to care. I tend to care a little, as you can tell, but well,
and I care on these kind of things, because this is really, there's just no reason for this, because you physically, when you do this, you physically have to transfer. The corporation actually has to write out a check to purchase this annuity, and they have to do that in the name of an individual. So whoever's writing that should right away ask to see a corporate documents that allow that. And if they had any brains, their legal department, especially if it's any kind of big bank, they're not going to allow that. They're going to know that that's not a legal investment. Usually what happens is the broker who's doing it is on the board and is getting a fee for it. And there's big fees on some of those annuities. So,
yeah, they're one of your. I used to sell a few of the brokerage departments. I don't care for the brokerage end of it, but that's one of your big money makers is an annuity.
Right. So
and this guy's been in trouble with Bank of America. They had to settle because he also sold somebody, which was not in their best financial interest. So
I would, Helen, if it was me, what I would do is I'd gather some information, make sure 100% that this is an annuity, what it was done. And then I would ultimately contact the state. But what I would do is confront your board with it, indicate what you've got, that it's an illegal activity, that it's fraud under the law, that you're going to file a complaint with the division, unless those people immediately transfer those assets back and drop off the board.
Okay.
Because that's illegal. And if he's a CAM, he should know that. CAM should know what are legal investments.
Both of them are CAMs, the treasurer and the president.
Yeah, then and that won't go over good, because they are then supposed to know the law. It's one thing for a board member to do it and say, I didn't know, but you're talking about a licensed CAM. They know what are allowed investments for an association. And so, they both either they are totally stupid, or it's an illegal act, one of the two. And I don't think they're going to be able to argue stupid in this case, because they have licenses. So, okay. Yeah. So I think you've got you can kind of tell I got a little irritated about that because,
Yeah. Well,
this other stuff happens and I understand what happens and something usually blows up. But here's the no good deed that goes on that eventually gets punished. They're probably
right.
thinking all they're doing is getting the association a couple more percent in interest. It's really good. We're making money. We're doing the right thing. And in reality, they've stolen money from the association, and they could lose it if something happens to those individuals personally. The association could lose big money, $100, $200, $300,000. And so even though they may have had, and I'm going to be real nice about it, may have had good intentions, they've committed fraud and they should go to jail for it.
Okay. All right. Well, I will get busy here today then and see what I can do with that.
And on the election side, much more mundane, I guess, than
I know, but it's
but on the election side, I mean, every association, including yours, needs to follow the provisions of Chapter 718 and the Florida Administrative Code regarding the election procedure process. And one of those is, as you said, the 60-day notice. The 60-day notice must indicate the name and the address of the association in terms of where people return their intents to run. Has to indicate the deadline for returning that intent. And like I said before, if it's hand delivered, must provide a receipt.
Okay. All right. Well, I'm comfortable with having them call me. Some of these people are snowbirds, so I want them to call me, and I will personally mail them the form. And, so that they can, I like your suggestion to include that intent form with each one that goes out. Why not?
Yeah. And that's actually the reason that's a little better, Helen, is that you don't want to put yourself in the position that somebody says, hey, I called her and asked her to send me a form and she didn't. And so therefore I couldn't run. This way, everybody's got the form. And if anybody wants to run, they all had the form delivered to them at the address of record for the association. And so everybody had the option. What you want to do is tighten it up so that they have to get a receipt, that if they do intend to run, that they send the document in certified mail, return receipt requested, or that they have it hand delivered to certain members or of the board or the office and have them time stamped and whatever.
Right.
But
in studying for all of this to get it together this morning, I read something that said about requesting an election monitor.
Yeah, that's what
you can. Yeah, you can. You can request that a monitor be appointed.
Would you think that would be something to consider? Because it does say that I need 15% of the membership, and 6 members. Is that 6 members of the board?
No, what it says is, hang on one second. Generally speaking, is not a rule that I look at every day. So, because there's not much monitoring going on. But what it says about the monitoring is, one second.
The Helen, on the election stuff too. So on the
who would
go ahead.
Who would you go ahead? Who would you contact about fraud?
Well, that's what I was going to ask you. Do you guys do you have audited financial statements? Are you subject to audit? Do you have
Yes, we just had an
audit. Did anybody discuss that investment with the auditors? Are they aware of it?
They are aware of it, yes, and they put it in a different category. But I could call him and ask him. Would he be the one?
I would at least ask. How that was possible. I mean, I'm surprised that usually the auditors find these kind of things. When we start doing confirmations, we find out that it's not the name of the association. But yeah, I would definitely. Have they issued their report yet for this year?
Yes, I don't have a copy of it, but I know it's been done.
I'd like to see. I mean, I'm curious as to how they disclose that, because um, at a minimum, even if it wasn't an annuity and it was some sort of stock investment or whatever, the income statement looks different. It's a comprehensive income statement. It's a different types of income statement. So,
well, no, the president said, he said it's an annuity and it's going to be in his name.
Yeah,
He's
well,
already said that.
that's what I'm saying. I don't know how they would have disclosed that without. I mean, that's a major violation of internal control. I mean, that would require a separate letter.
And Helen, basically on the ombudsman, just to change speed on that for 1 second, what the regulation says is 15% of the total voting interests entitled to vote at the annual meeting for the election, or the owners of 6 units for the election directors, whichever number is greater, may petition for the ombudsman to appoint an election monitor. So this depends upon the total number of eligible people who can vote, and then whether 6 or 15% of that is the greater number, and that's
so 15%. We have 264 units, so it'd be 15%.
So that'll be 15%, obviously. So it's going to be 15% of the total voting interest can petition.
Or 6 members.
No. It's whichever is greater. So in your case, it's going to be 15%.
Okay.
That's on small. That's basically
very
for
small.
small.
That's like for a 20 unit, 30 unit, 40 unit, whatever.
Yeah.
Small one.
Yeah.
Okay.
Yeah.
Okay.
They don't want just 1 or 2 people to be able to call it. They want it to be big enough that.
So it's the greater number. So
Yeah.
for you, it'll be the 15% of the eligible
Totally.
voters.
Okay.
Yeah.
Okay.
Yeah.
Okay. I can work with that.
Yeah.
Well, I really appreciate your help, gentlemen. Just, you don't know how much. And I know it's not going to be an easy course, but sometimes things in life just aren't easy.
No, it isn't. And some things, when they start going off the rails like that, I mean, it's risky stuff that, Peter said a number of times, and of course I'm 100% behind it, is that your job as a board member is not to get the maximum return possible. It's not return on your investment that you're worried about. It's your return of investment, to have that money when you need it. And so some of this stuff is just, and this is really risky. It doesn't seem like it on face, but you've turned an asset over to an individual who now can be sued, who's outside the protection of the corporation, and has all kinds of things, who can assign stuff, who has beneficiaries that can claim an interest in it, all types of things. And that's just, and it's fraud. It's
I mean, the bottom line here is, we all use this word fiduciary a lot.
Right.
Okay. And it does get misused a lot. It gets tossed around. But it does have applicability here. Yep. Because fiduciary means trust. And it means those that are on the board and those are the officers of the board are in the position of trust to the membership. And, when that trust is broken or breached, that's when you have breach of fiduciary duty. And, and quite frankly, board members are given a fair amount of slack by the law. They can make wrong decisions. They can, they can goof up sometimes. No one's perfect, but as long as they're acting in good faith, without self-interest, without self-dealing, and they're okay. But here, if you're putting the association funds into your own name,
I know
that's kind of hard to justify.
It's
at one point I was a real estate broker, and I understand the word fiduciary, and it is important. And I have that with every 263 other people, unit owners here. I don't need to, like you said, make money. I need to keep it safe.
Yeah.
Right.
It's funny, Helen, years and years ago, when I first started my own firm, which was 25 years ago, I had a client that I was doing bookkeeping for. And in those days, you had to issue a report with the bookkeeping stuff, and it was what they call a compilation report. It was very low level, but you had to issue that, right? So this client, like a lot of them, that ran out of money and all of a sudden stopped using me, and I didn't issue any reports. And then I get a call from the bank one day, and the bank says, I got a copy of your financial statements here, and they don't balance. And I'm like, whoa, that's not going to happen. Show me what are you talking about? So they sent me the copy of the financial. It wasn't ones I had done. the client had forged the financials, and of course wasn't an accountant, so didn't even know to balance them, and at the same time had put a report letter on it from me and had forged my name, had signed my name to it, right? And
Right.
I said to the bank, I said, where did you get this from? This is on a hard copy. He said, no, it was faxed to me. I got a fax copy of it. So what the guy did is took one of my other reports and copied that signature onto his letter. And he even used, it was in the old days when you used a typewriter, he even used a script type print. So it looked like it was handwritten. It was crazy, but something I would never have done, and gave it to the bank. So the client calls me, he says, well, I thought I had to do that. I thought I was protecting you. And so I went to my insurance agent because I didn't know what to do. And believe it or not, I called the AICPA. They didn't know what to do. My insurance agent said, I've never had anybody do this before, and it's to a bank. So it's fraud, and it's a federal crime at that point. And so, but my insurance agent said to me at one point, I said, well, maybe he just didn't understand it. And he said to me, hey, Mark, at what point when he was copying your signature to a report,
Did he not understand?
did he think he wasn't doing something wrong?
Yeah.
And so it's kind of that kind of thing. You know what I mean? You kind of can make excuses, but at some point when you're actually writing a check out to some board member personally, for a couple $100,000, at what point do you not step back and think, maybe I'm not supposed to be doing that? So, anyway.
Anyways, I really want to thank you for all your help, and have a good rest of the day.
Yep, you too. Good luck with it.
Good luck, Helen.
Thank you. Okay, bye-bye.
Bye.
Bye-bye.
That stuff was happening all the time, Peter, down south. Broward County had a big problem with that. And it was going around among a number of associations. They thought it was a great idea. And they nipped it pretty quickly down there. But there are a couple board members that ended up, I think ended up with some probation type stuff, because they ended up taking some other money.
Yeah, I hear this, and not that exact fact pattern, and I've mentioned this before on the show, but not where it's, where someone gets an annuity, in their name necessarily, but what I do hear all the time, or fairly frequently, from my own clients is, invariably there's someone on the board or someone in the community who has a financial background or thinks they're the financial, wizard.
Right.
Who gets all crazy saying, we're getting nothing for our money. This is ridiculous. Why are we getting, 1.0% and whatever certificate they have? And I can, triple that, quadruple it, whatever, and so, and I always say, watch out. You just, again, like you said, your function isn't to maximize return.
Right.
It's just to make sure the money's there when you need it.
Right.
I'm not saying you should put it under your mattress either.
No.
but again, this is not you are not a investment house.
No,
you can be risky with your own money. Okay, you want to take your own money and buy whatever investment. You want to invest in whatever. Go ahead. Gold or silver or whatever. But I'm not saying that's risky, but I'm just.
Yeah, well, and it is a case.
Association money is put in depositories, insured through the FDIC, and you sleep at night, and it's there.
Yeah, and that's the thing, and it is very difficult because in many cases too, it does create some of this stuff. When they start talking about an annuity, I know for sure that I know what's going on when they're talking about. Whoops, we lost a call here. Hang on a second. Yeah, but anyway, it's one thing when you're talking about. I know, like Peter's saying, is your personal investments. That's a different story, and you can risk your own money. That's fine, But in that fiduciary capacity of, you can't be risking other people's money, and at the same time, you definitely can't take other people's money. But it's interesting that a lot of times that that you can do some of these investments. Some of them are allowed, but annuities are not, because they cannot be done in the name of the company, and so that's the issue with those. There's just no way you can do that, you can make a company a beneficiary. You can do those kind of things, but there's no way that you can actually have the company own the policy. that way. So, it's just, it doesn't work.
And many documents just restrict what you do with the money anyway. So you got to look at those,
the other side of it, and that's what I was asking, is that when you get beyond the standard CD type investments, you create a situation from a financial statement standpoint that is much more complicated than the typical financial statement. You have a comprehensive income statement, they call it, and at that point you have to actually show the change in value of your investment through the income statement, and there's all kinds of disclosures that are necessary. It makes it very cumbersome and expensive. So I'm really kind of interested in terms of what kind of report was being done. What I found from some of the associations that were having this happen down south is that nobody even knew about it. They didn't even realize that the investment was in that form of investment. Some, you talk about things that have happened in the day. I don't know if I told you this, Peter, but I had an association. I had an association up in off of Hutchinson Island up years and years ago, and they had a small board, like 6 people or whatever, and they decided they weren't getting, like you were talking about, they weren't getting enough money on their CDs. And in those days, they didn't have CDARs, the CD exchange program where you could, buy CDs all over the place and that kind of thing. So, you got the local bank, and if it wasn't paying enough, they got upset. But so what they did is each one of the directors took $100,000 out of the reserve fund and went to find a bank that they could get a good interest rate on.
There you go.
and nobody tracked it. And so it ended up that I ended up picking the association up, and I find out I'm doing this audit, and I'm finding out there's like $600,000 or $700,000 out there someplace that aren't on the books. They just were gone. They got written off because each one of the board members was out shopping around the CD. The other situation I had, which was kind of tragic, had a president who took control, and he kept doing everything, and he actually had the books out of his association. For the association out of his home. He was running it on his computer. He died. Nobody knew his password. All of the records were gone. They couldn't get anything. So anyway, but that's it for Condo Solutions on a Monday morning. Hopefully you guys all had a good time and learned something. And hopefully, as always, Peter and I always learn something on this thing. So that's always a good thing too. And hopefully you'll join us again next Monday morning from 9 to 10 o'clock here on WSTU. Tell your friends, write down the number 220-9788 right here on WSTU Digital 1450. We are Martin County's very, very, very old station.